Hey, welcome back to the channel, Fully Invested Fi. Today is March 1st, 2026. Crazy that we're already in March. The year's just passing by. But today I'll be going over portfolio updates from week 39 and 40, since I missed last week, or month 9, since I started investing my full paycheck at the end of May 2025 and fully living out of my Robinhood brokerage account. So as usual, I'll go over the performance during this period, dividends received, portfolio news, and also just finish with the finance video of the week. So as always, I share all of my numbers with radical transparency, and you can kind of see my full portfolio and performance with no paywall at all. Everything is linked in the description below for free. If you want to follow along and kind of poke at the numbers yourself, you can kind of look at my Snowball portfolio in particular. That's all free. So yeah, have at it. Before we get started, as usual, just a disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor, and nothing here should be taken as financial, investment, or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Investing always carries risks, especially when using margin, and you can potentially lose money. Don't copy what I'm investing in blindly without understanding the risks and doing your own due diligence. No returns are guaranteed. So for anyone that needs a refresher on kind of like the flow that I typically used in the past. So obviously this is a little bit old and outdated now, given layoff that happened the other week. But yeah, that's in my plans this week to get this updated for at least the temporary little while that I deal with the layoff. Yeah, normally this is what I was doing before the layoff happened. I invest 100% of my income. It used to be 10.8K every month, but now it'll be closer to 4.4K every month with the unemployment income. I invest it normally into growth and high yield ETFs, but with the layoff, I'll be focusing on safer high yield ETFs for now to keep my monthly cash flow going. So think like SPY, QQQI, TSPY, TDAQ, XPAY, things like that. And I've stopped using a traditional bank account to live entirely out of my Robinhood brokerage account. I use cheap margin of 4.5% to bridge the gap between my bills and my dividends. And the goal ideally is to never sell a share to take out the account, like apart from rebalancing within the account itself, and really forever compound my growth in high yield assets and have my monthly dividends eventually exceed my monthly expenses. If you want an in-depth breakdown of this chart, check out the link at the top right. And yeah, let's just get started. If we pop over to Robinhood, we'll get a live view of the portfolio here. So the overnight numbers are starting to come in. Don't know how accurate Robinhood's futures are, but so far surprisingly green given the war in Iran that has broken out over the last couple of days. We'll see how that actually works out tomorrow in reality. But so far, green, surprising. We check out kind of like the different things. SEHD is going good. XPAY is weirdly up. I don't know. This seems wrong for VU. Everything else is kind of in the red, especially for tech and whatnot. Energy doing okay. Bitcoin going up. Gold going up as well too. That's kind of like Bitcoin, gold, energy. Those are the kinds of ones that I'm kind of expecting to kind of go up tomorrow. So yeah, we'll see how that goes. As far as my numbers over the last couple weeks and the last month, yeah, we'll be covering the month of February. Forgot to mention that earlier. But so yeah, on the week was actually green. So there was kind of like a good run up in the middle of the week with a little bit of a dip down there. And yeah, on the week, I'm positive 0.38% or $612. If we go on the month, it's definitely negative. It was definitely a choppy month given everything and given the margin amplification and everything. So I was down 4.1K or 2.46%. If we go over the 6 months or 3 months, sorry, still trying to recover from those lows from November, right? And kind of try to get out of there, but still a ways away. So down 4.3% or 7.3K. And year to date, how we're doing, down 2.57% or 4.295. Was doing good like in the beginning of January and like towards the end, and then yeah, just as stuff has dipped, just hasn't really had a chance to properly recover in any successive green days, right? So you can kind of see how stuff was going for a while. I was actually beating the S&P, but now it's kind of gone down in the dumps here. And then on the year, I'm up 1.75%. So since I transferred everything into Robinhood in July last year, we're up $2,791. So that's how it's looking. We'll switch over to my investment sheet here to kind of look over all the top line numbers and kind of dive into stuff in detail. So if we look over here, so the gross value of my portfolio, if you kind of combine all my assets together, I'm sitting at $322,573. If you factor out the margin, which is $160,991 right now. So this has ticked up since you probably last saw the video. The mortgage came out at the end of the month. So this has gone up. So now my net margin value is sitting at $161,581. So that's the net value. So roughly matches what you see in Robinhood, right? We go over just both the total return and the unrealized gain loss plus the realized gains. So I'll be going over these numbers over here, essentially, these ones over here. So if we factor in total return, so that's dividends included, realized gains, and just the margin going off the net value. So I'm up $42,719 or 26.44% if we factor in the margin value. And then if we go off the unrealized gains combined with like the realized gains, I'm actually sitting at like minus $13,810 or minus 55%. So yeah, you can kind of see the two realities here as far as like the columns, right? So total return, so this includes dividends, and then also unrealized gains here. So obviously for a lot of the high yield stuff, a lot of stuff is in the red, given that I was kind of going heavy into some of these ultra yielders last year. This year, I'm trying to kind of reverse that balance a little bit, going heavier into like TDAQ, TSPY, QQQI, things like that, XPAY. So those I expect to be closer into the green generally, even potentially in unrealized gains. And yeah, we'll be focusing a lot on those more this year. As you probably saw in the last video, I started selling off and rebalancing stuff in the portfolio, right? So I'm in the middle of getting rid of like a lot of my single stocks. So got rid of most of them on the growth side. I only have Hood and Take Two left. And yeah, I'll talk about those later, but still kind of debating. Maybe I'll just going to really pull the plug and just accumulate all the losses and just carry those over for future years. We'll talk that through. And yeah, only NVDY left pretty much on the high yield side. And GOW, but which I'm kind of using as my proxy for my YouTube earnings. So kind of just going to leave that for now. And BTCI really, if you count that as like a single stock in a way. Overall, my goal with like what's happened with the layoff is to try to reduce the portfolio volatility and swings as much as possible. So that's why I kind of want to focus on kind of ETFs and indexes as much as possible going forward. And then once I kind of get through this layoff period, I'll probably kind of refocus on single stocks here. But I think for now, ETFs is the best way forward as far as keeping things a little less volatile and just having a lot less beta in the portfolio. So yeah, so that's the numbers, top line numbers. If we go down here, how that breaks down between the growth and high yield income stuff. Of that 322K, 171.8K of that is in growth or 53.28%. And 150.7K of that is in high yield income. So that's kind of how it's split up. And we kind of can look at the categories later in Snowball as far as like how that all splits up more neatly there. And then as far as margin health, so I'm sitting, the gross value, like I mentioned, the margin. And then if you apply the blended margin maintenance, so right now my blended margin maintenance dropped quite a bit, given that I rebalanced out of my higher margin maintenance names like Misty, WPay, and things like that. So now my blended margin maintenance has gone down all the way down 25%. The only thing that's 30% now is GOW. And this one I kind of debate even too. Maybe I switch to like Goop, for example, from Curve, just to kind of get that down to 25%. This is definitely hitting my little OCD brain as far as like everything's 25% now, and then there's just this one, right? So we'll see what I do with that this week. And yeah, and so if we apply this 25%, so basically taking this gross value and then timesing it by 0.25, you get your margin maintenance here, right? So $80,753. So this is the value my portfolio would have to drop for a margin call to get triggered. So this is in hot green, like all this is in hot green because I'm kind of monitoring these like very closely, right? So with that, so what you'll see in Robinhood will kind of roughly match this. So the margin buffer, if you go off the net portfolio value, so this number is actually 50.02%. But personally, I kind of don't like going off Robinhood's number because it makes you feel safer than you are. You're just like, oh, a 50% drop. That's probably not going to happen, right? But realistically, that doesn't factor in the margin. And what's important to factor in is like, if your gross portfolio value, so all your assets, right, fall 25.06%, so that's actually the equivalent of 50%. So that's with the margin amplification factored in, right? So I think that's really important. So really the market would have to drop 25% in a couple weeks, in a couple days for a margin call to get triggered. So that's why I'm always kind of keeping this number in mind. So if this ever gets like dangerously close, then I'll have to kind of bring in some emergency measures there as far as like cash from outside the brokerage or potentially selling some specific positions or whatnot. So we'll keeping an eye on that. And then with that, I have like a buying power of $74,428. And if you half that, and how you get this is basically kind of minusing your margin total. So this is the total allowable margin I can kind of use. And I'm only using 160.9K of that, which is crazy to say. But the difference between that is this number, the buying power, right? So but obviously I'm kind of keeping this as big as I can and keeping this as buffered as I can, right? So that's why this number is kind of steadily growing month over month. And then if you half that, the cash available for withdrawal is $37,214. So with all that, that's kind of making my equity sit at 50.09%. So right there, towing that line of 50%. And honestly, given the layoffs, I'm expecting this to kind of dip under 50%. And that's kind of just something I'm gonna have to live with for now. I could potentially sell some positions to kind of get that over. Like you saw, as I was kind of rebalancing stuff the other day, I was actually up to 60% because I was kind of holding cash from kind of sold positions, right? But I kind of got those into CLSE, ORR, and things like that. And like, yeah, TDAQ, TSPY, MLPI. So yeah, you can kind of see that if you do leave it in cash, it pushes up the equity quite a bit, given that like you're not holding anything in equity, right? For margin maintenance, essentially, right? So this is basically the cash that's held by Robinhood as collateral, essentially, for your account, right? So yeah, that's how the margin health's looking. So overall, glad that's still over 50%, but fully expecting this to kind of dip under 50 next month as I kind of stick with like being in a layoff and not bringing in 10.8K anymore and bringing in closer to like 4.4K or like closer to 9K if you combine my dividends as well too. So that's where it's looking. And then as far as my monthly dividends, this is where it's sitting right now. So I'm estimating roughly $4,427. If you go off just the high yield assets that I have invested, so the 150.7K, that's actually a 35.25% yield on that money. But if you go off the full taxable portfolio, it's actually sitting at like a 17.15% range if you go off the full 322K value, right? So that's where stuff is looking. And then if we hop over to Snowball, I can kind of take a deeper dive on that stuff. So I think I mostly fixed a lot of my numbers in here. I just had like a lot of issues. Well, things got like a little bit messed up with a lot of like the automatic entries and manual entries. And I think I figured it out today. I noticed that there was a lot of kind of duplicate entries from when I transferred stuff from Fidelity to Robinhood. So I actually kind of got that sorted. So now I think it's a little bit more accurate. Still missing some way older data that I'm kind of tracking here as far as like dividends and stuff. But yeah, well, maybe one day I'll get to that, but not too important. So this is why this is a little bit different compared to like what you're seeing in the investment sheet there. But here I kind of took another pass at my categories, as I mentioned the other day. So now I reallocated my high yield ETFs to just 2 categories instead of 3. So now I put the singles and the ultra yielders all together in kind of like this 30% plus yield category, right? And then also my anchors, which sit anywhere between 10 and 20% yield. So you can kind of see that because of the ultra yielders and because they're just paying out higher yields and stuff, their NAV erodes a lot more. So this is the only one that's actually in the red. Everything else is in the green, even the anchors here. So you can kind of really see what's kind of pushing things down. So YMAX, ULTY, NVDY's kind of solidly in the green there. GOW solidly in the green as well. Chippy's brand new, but a little bit in the red here from just being down a little bit last week. And BTCI, which just crypto in general has been getting hammered. So that's still in the red. And the anchors here can kind of see, so XPAY, TSPY, TDAQ, QQQI, MLPI, all doing good and in the green here. And also I put in my allocations here, at least my target one. So roughly aiming for a 10% hedge. So ORR, IAUI, and CLSE. Since these are kind of like a hedge given the shorts, I'm kind of including those in here. So yeah, aiming for like a 10% hedge overall, aiming eventually for 30% for my anchors here. So I want to build this up a lot more this year. And I definitely want this to surpass the what's in the ultra yielders here in the singles. And then yeah, aiming more for 17% here for my growth and div growth anchor ETF. So VU, SPMO, SCHD, QQQM. So that's all sitting nicely in the green except for SPMO since it's pretty fresh still. And yeah, aiming for 40% for that. And then for my growth single stocks right now, there's just Take Two and Hood. But yeah, I'm still on the fence. Might maybe just still sell these and just realize those losses, honestly, and just kind of get the volatility out of there. Thinking maybe I could put this in VGT or whatnot. But yeah, that's 3% right now. And yeah, so that's how stuff is looking. If we pop over to the growth section here, so if we'll go over here and then I will just isolate stuff to basically the month of February, right? Just so we can kind of get the full picture of the month here. So yeah, compared to the S&P, I didn't do so hot last month. And yeah, as always, we'll be showing the good and the bad of the portfolio, right? And this is with like total return and everything too. So that's with dividends received and everything. It's just, yeah, there was just a lot of downward pressure this month with those dips and getting that amplified by margin and whatnot. So yeah, so I'm down 2.8% or $4,649. The S&P in that same time period was down 0.77% or $1,279. I think like they basically assume that like in the same points that you invested in the S&P. So that's how they kind of make that comparison. So if we go year to date, kind of similar, S&P's up and I'm kind of down there, just the downward pressure. You can kind of see those down days here that are like, have really kind of shot stuff down, right? And haven't quite really recovered and gone back there, but you can kind of see here how I was kind of outperforming for a little bit for most of January. And then, yeah, since February and the end of January, it's just been kind of tanking, right? So you can kind of see how that shifts from like 7-day to 1 month, 3 months, 6 months, and a year. Yeah, I think this stuff is a little bit funky here. I take this with a grain of salt. I think, yeah, with all of my numbers that kind of gotten messed up the other month, yeah, like even just the S&P stuff here is kind of weird. So yeah, I'll just stick to year to date there and for that. And then if we pop over to my favorite new section here, the holdings performance heat map, we'll go over February again here and isolate that and kind of just get a heat map for the whole month of how things did, right? So SEHD has done amazing in February, up 6.5%. XPAY down 0.83%, so slightly trailing VU. It's underlying there. SPMO just down slightly as well. Less so than which is nice. So that's kind of precisely why I'm in SPMO, just to not be hit as hard as tech is. NVDY and NVIDIA just got hit harder this month, down 0.62%. ORR doing good, fresh position, but that's holding up good. CLSE down a little bit. Crypto down a lot, obviously again. TDAQ holding up good and QQQI holding up good. So this is nice to see too, right? So like the underlying for that is the QQQ for both of these and kind of applying different strategies to them. But with their dividends received, like that's actually kind of helping quite a bit. So you can kind of see how that's helping in down months like this and helps cushion volatility, right? Chippy down a little bit, fresh from last week, but yeah, just got in the red after I invested into it. YMAX as well went down. ULTY, this is a nice surprise, right? And that's why I'm fine with still investing in it a bit. Not as heavy as I was last year, but like, yeah, so far so good. So far year to date, it's been holding up nicely. It's getting more dividends than it's losing every week as far as capital gain, so that's nice. So that was up 2.5% with dividends included. MLPI off to a solid start. Hood, ignore this. This is like totally broken. I'm definitely in the red in Hood, and for some reason this is showing 31% gain, which is totally wrong. TSPY doing good again. Similar thing as like TDAQ and QQI. Can kind of cool. It's cool to see the difference between VU and still kind of doing okay in a down market. Google has kind of gone down quite a bit in the last month. And gold holding up, and I expect this to kind of spike quite a bit with the Iran stuff going on right now. And yeah, if we go year to date, you can kind of get the full picture of everything, right? So yeah, CHD up 16%, XPAY and VU trailing stuff. I won't go over every one, but you can kind of see there, right? Like how stuff is looking. That's why I kind of love this view. Just really shows just at a glance how everything's doing, right? And kind of what sectors are being affected the most and whatnot. So obviously tech's getting hit hard, crypto's getting hit hard, but everything else kind of holding up pretty well as far as like the other stuff, like the value stuff, even like the covered call ETFs here holding up pretty nicely. And just, yeah, this is really nice to see between QQM down 1.1%, but TDAQ up 0.3, QQQI up 0.53, right? So dividends are really helping cushion the blow of it going down, right? So as far as dividends, if we pop over, so we'll switch back to February over here. So we roughly brought in $3,894.99. So really the last 2 weeks. So the last time I gave an update was for this week here. So got quite a bit of dividends here between just a little bit over 1,000 here. If my quick math's going good on the week of the 16th. Then after last week was a smaller week, got like, yeah, closer to, this was like what, a little over $700 here between GOW, WPay, Chippy, my first one from Chippy, ULTY, YMAX, and NVDY. That's how it's looking. Definitely a smaller month compared to others if we go over trailing 12 months here. So yeah, last month I got 4.5K and then this is definitely the smallest month that I've had in a while actually. So yeah, there was a lot of rebalancing this month, so probably partly due to that and also because of a smaller month. But also stuff got hit, right? Obviously. But yeah, the future months actually looking more positive, looking at least like we have like a 4K floor and then kind of get higher than that generally. So for March, we're looking like we're going to get $4,545 right now currently as the estimate. That'll probably fluctuate a lot from week to week. And then also like as I'm going to be investing my unemployment checks every week, that should hopefully help kind of keep that going up a little bit more. So yeah, that's how March is looking. And then if we go over to the dividend section here to kind of start looking at the yield on cost, right? So yeah, what's important is also to look at what you're getting every week, but also like given how much you've invested, how much your actual yield on cost is on that capital, right? So for example, on ULTY, so on a weekly basis, like those dividends are roughly netting out to like 60-70%, so 70% last week. Given my invested capital and like how things have gone down, right? The yield on cost on how much I've invested is actually 47.61%. NVDY was last week was 45%, but like with the yield on cost is 28%. YMAX, yeah, 43.37% last week, but with my yield on cost, it's like 28.21% equivalent. GOW holding up steady, good at 43% here. Chippy, brand new as well, 40.97%. So yield on cost pretty close there. BTCI's cost has gone down quite a bit, but yeah, 28.29% every month and a 16.5 yield on cost. And XPAY, yeah, just holding up nicely above 20% here. TDAQ holding up nicely at 17%. MLPI is brand new as well, just holding up as well. So these are kind of like the non-NAV derivatives that just hold up solid, right? Like I'm hoping that these don't move too much. So yeah, this whole section here, and then these ones are a little bit higher payers, and I'll expect some erosion there, right? But yeah, that's the dividend page there. But it's important to kind of keep both those numbers in mind as you're kind of investing and stuff, right? And if you see this this blue line kind of steadily going down like too heavily, right? And that's kind of what happened to Misty. That at one point that was down to like, yeah, it was getting like a 80-90% dividend a week, and then my actual yield on cost was like 15-18%, right? So that's where stuff is at as far as the month. As far as my goals and progress, right? So let's pop over back to the sheet here. So I updated my numbers and starting to invest 100% of my paycheck, right? So we got all the numbers here. So the main numbers that I outlined earlier, basically just kind of put these in a row, right? Just my margin buying power, my margin buffer, both full and net, the margin as well. And yeah, if we kind of look at it on the chart here, it's nice. And again, shout out to Rob at Velocity Portfolio for the idea here to kind of just chart these numbers up, because it's just always nice to see visually. But yeah, nice to see how gross value just kind of steadily growing since I started doing it in March, right? Like I started at 205.8K and then now I'm all the way at 322.5K. So great growth there. Net value obviously is not growing as much given that the margin is growing steadily with it, but still I started from 117.8K and now I'm at 161.5K. So you can kind of see the steady growth there. And yeah, you can kind of see how like the margin, equity, buffer, and net is kind of like evolving there. So kind of roughly staying flat for the most part when you kind of look at that, right? And as far as my available for withdrawal, margin buying power, and margin buffer, so yeah, margin buffer is kind of steadily growing, which is good to see. Margin buying power is also steadily growing, and available for withdrawal is steadily growing, right? So love to see it. So you can kind of see how this kind of ebbed and flowed as my bonus came in November, and stuff just kind of kept growing once I kind of kept my expenses to like kind of the $9,000 mark like I was hoping to do. So this is kind of steadily growing, and yeah, this will be interesting to see over the next few months given the layoff. Like I'm sure this is going to actually probably maybe go down a little bit given that not as much income is coming in. So we'll keep an eye on this and see how this evolves on the chart, right? And then also for the monthly dividends, kind of see how stuff has been going ever since May, right? So now it's actually been on a little bit of a downtrend. You can kind of see the trend line down here, especially the last few months. Stuff that got hit hard in November, right, and December, and so now that's kind of like flipped the trend a little bit. So hopefully we can kind of get this back up as we kind of invest in like more solid, less NAV eroding names this year. So yeah, that's how stuff is looking. As far as the tracking, so I updated the numbers here for November as well. So yeah, it's actually month 9, but because this is not tracking since May here, but yeah, you can kind of see where things are going or headed, right? So I basically updated this number here, and then everything kind of reprojects from there. Yeah, I might have to maybe kind of do a temporary other sheet with these numbers change, given that the monthly paycheck contribution will change. So this will kind of be like an alternate history in a way, like had I not lost my job. But we'll kind of update things as we go. All the goals here, just as a reminder. So I'm kind of using my old paycheck as like the targets, right? So my extra net paycheck covered would be 5.4K. My monthly expenses covered would be 9.1.8K right now, because that's factoring in inflation, the 2% inflation every year. 10.8K is my net salary. My gross salary is 14.9K. Margin paid off target is $0, obviously. And yeah, ideally, if I'm going to retire on this whole strategy, target would be to actually at least hit like a 2x gross monthly income, ideally. So yeah, those are the target numbers I'm looking at. So keep that in mind as we're kind of like stepping through here. So extra net paycheck covered. So that's looking more like potentially June. Like this alternate history again, is if I was still getting my full paycheck, but just for now as an exercise, kind of just showing how stuff is moving along given the numbers moving around. The expenses covered, this would be closer to 9.3. So down to February 2028, and then yeah, June 2026 for extra net paycheck covered. Net monthly salary covered. So that's 10.8K. This would be dropping to October 2028 here. Gross monthly salary. So that's 14,916. So this would be closer to August 2030. So hitting the 5-year mark here of like where ideally and around where I would want to be early retired. So yeah, definitely falling behind here. And then margin paid off. This would be closer to like, if we go here, 0. So 2032, so 2 years late, and then 2x gross. This is way past it. My list doesn't even go there, so I need to extend this, but way past that. So past 2035. So yeah, as you kind of see, stuff is going to get delayed. This stuff will get delayed even more with the layoff right now. So we're going to have to see how we readjust things. That's where everything's sitting and goals are. So we'll see. Once I kind of get a job again, I'll have to kind of reassess everything and like how I might have to do things, right? Maybe it's a thing where I need to be a bit more aggressive with like my dividends that I receive. Maybe I just reinvest them all potentially into the safer yielders, I'd say, like the anchors like TSPY, TDAQ, QQQI, TSPY, XPAY, and whatnot. Just so they're not less NAV eroding, but maybe that would help potentially kind of help bridge the gap for how I'm falling behind here. So we'll have to keep that in mind and keep looking at that. And yeah, that's where I'm at for goals. We pop back to the portfolio here. So obviously like this week, just a lot of big changes. Definitely check out the video that I did last week as far as like all the big changes I did as far as kind of selling off my single stocks and whatnot and realizing some gains and losses here. You can check that out at the top right. But yeah, big thing with that though, for the rebalancing is that maybe the more I think about it, maybe I'm not done. Because yeah, I might still potentially pull the trigger on rebalancing out of NVDY. So this is still a pretty big holding and a pretty big one that's in a single stock, right? So this is, since this tracks NVIDIA as an underlying. So as bullish as I am in that, like I think it would be prudent to kind of be more in like a basket of them for semiconductors rather than like just NVIDIA. So yeah, I might still potentially sell NVIDIA, put that all into Chippy since, yeah, these are kind of redundant since NVIDIA has a large holding in that. And I think like really like when I check Testfolio here too, I think this is pretty telling too. If we add like say NVIDIA and Chippy here, and I'm going to turn off total returns for these. And equal weight, Chippy as well, equal weight. So I'll do 2 different back tests here. So you'll see the full history here. So you can kind of see that like NVIDIA is like NAV eroding, right? Given how much it's paying out, and Chippy holding up pretty well. I think like a large part of this is due to Chippy actually holding the underlyings for all their stocks, plus selling covered calls and stuff like that on top of it to kind of generate income. So the beta for NVIDIA is actually surprisingly a lot lower. So moves a lot more compared to the S&P, and Chippy moves a lot more, but the volatility is slightly lower, just by 3%, but still. What was interesting is that when I was doing the year to date on both of these, it was kind of interesting to see the difference there. So you can kind of see that like the beta for NVIDIA the year to date had been a lot higher. So these kind of flip, right, over time, or at least year to date. And yeah, so Chippy is actually half as volatile, or not half, but like, yeah, 25%. I can't math right now. Less volatile than NVIDIA. So NVIDIA is at a 1.96 beta, so it moves almost twice as much as the S&P when you look at that. And Chippy moves like 50% more than the S&P. And yeah, the volatility, big difference there. 32.93% for NVIDIA and 25.71. You can kind of see the drawdowns are a lot less. The average drawdowns a lot less. So yeah, that's kind of partly why I'm kind of considering still just kind of pulling the trigger there. And I know there would be a lot more losses that I'd be realizing there, but yeah, in the end, that'll be kind of like carryover, right, to future years. Oh, well, I lost my stuff there. But there would be like an additional 9.7K of losses on top of like the 10.5 I've already realized this year. So it'd be quite a bit, but really how I can kind of see that is that it is carryover for future years. So if ever I need to realize some gains, I can kind of offset those in future years and not pay taxes on them with these losses. As I understand it, how this will work is that like, yeah, say I have like, I don't know, say I have like miraculously 20K in gains this year, then those would get fully offset. But realistically, I won't. So like let's say flat numbers, it'd be like, whatchamacallit. Let's say I have, so I'm minus 20, oops. So minus 20K right now in losses, right? So say I get like, I don't know, 15K in gains. So then all this kind of gets wiped off, and then my losses are actually kind of just 5K after that. And then what happens is that I can apply up to 3, like if I was just filing a single, I could apply 3K of this to all the income that I'll be making this year and kind of lop off a little bit off that to not pay taxes on them. Given that I'll be kind of doing married filing separately later this year, I'll actually be doing 1.5K that I could kind of take off my ordinary income there. So yeah, that's how as I understand it, that's how I think the losses and kind of gains being offset, and then also how that affects ordinary income. If someone thinks that's wrong, definitely please correct me. I've had a couple conversations spun up between that in the comments over the last videos. So, but this is how I understand it there. It's in that order of operation, right? So first any gains, and then second, if there's any losses left, that can be applied to ordinary income, but only up to a certain amount. So NVDY potentially, GOW, that I'll kind of leave that. Like they'll probably, if I do move out of stuff, that'll be kind of the exception. Just this, because this is like kind of like the proxy for my YouTube earnings. Like as I've said in the past, I don't know, maybe I think of a different ticker that might be better. That might be safer than a single stock potentially. But yeah, for now that's good. And like I said, I might also just switch that to Goop potentially, just to get rid of this 30% here. And then for Hood and Take Two, like I know I said I'd be kind of holding onto these to kind of let them recover, but the thing that's hard, especially as I'm kind of laid off right now, is like these day swings, right? So like for Hood, for example, is very volatile. This was down like 4.53%, and VIDI, for example, was down 3.9% on Friday, and Chippy was down 1.06, right? So you can kind of see the difference between a basket and the single stocks here. So yeah, really, ideally, I'd love to kind of just like reduce the volatility as much as possible. Thinking on that may or may not happen this week as I think about it, but just as a heads up there, just that volatility is what I'm really kind of targeting to reduce as much as I can. There'll always be volatility given you're in equities at the end of the day, but this can kind of, and little baskets of stocks can help reduce that as much as possible. And yeah, as far as my first unemployment paycheck, I think I'll be getting that this week. Last week was the waiting week. I didn't get anything last week, and then so this week should be the first one. So I should get $1,100 roughly. And yeah, and I'll be doing just like a full paycheck investing video as normal, just with that smaller amount, right? So that'll be kind of a cool video to see. You're just kind of seeing me invest my full unemployment income. And yeah, that's that as far as the portfolio goes. For finance video of the week, this one's probably like a long overdue one, but Paycheck's a portfolio. So he had a video, Sean, last week about potentially how he would survive if his paycheck went to zero, and he suffered a layoff as well too. So yeah, I mean, obviously Sean at Paycheck's Portfolio has been a huge inspiration for my channel, along with finding his channel and other channels like Eugen's back in May 2025 and then around there. It really made me take a deeper look and really research how I could be investing my full paycheck, given that I was almost kind of halfway there, right? At the time, I was dabbling on living out of my brokerage a little bit with like smaller bills and stuff, and with margin while investing like 50% of my paycheck at the time. And yeah, still like I had started kind of heavily investing into high yield ETFs like several months before. But yeah, so obviously, yeah, props to him. And yeah, I have shouted him out a lot in other videos and descriptions and comments or whatnot. Always happy to refer people to him, given that he's like one of the pioneers in that space, along with like him and Todd Aiken and all that. Definitely, they help open my eyes to that this whole thing of living out your brokerage for sure. And yeah, I mean, shortly after my layoff the other week, it was cool to see Sean's theoretical video here of how he would handle if he was gonna get laid off. So yeah, kind of goes through all the steps he would be taking there. So cool to see how different steps different people can take, right? And with different strategies to approach to get the same goal. So always great to see how people would handle that in a similar situation. And I'm all for that. So expose yourself to all kinds of different ways of doing stuff and really pick and choose what works for you, right? And yeah, I mean, that said though, check out the video and check out his channel, like tons of good stuff if you aren't already following him, but I think we have probably a lot of overlap between people that follow us. That said, hope you're getting a lot of value seeing how I'm navigating this very real and difficult part of my career right now. I'm still living out of my brokerage account as I was before when I had a job. So I think like this whole layoff will be a really true stress test of the whole system. And also again, like I'm personally just like so happy that I have this income cushioning things as I hunt for my next job, right? So it's just kind of giving me like more peace of mind, and it's letting me be a little bit pickier for the next few months, at least for the next 6 months at least, as I have the unemployment, where I can kind of really land something I'm excited about. And yeah, so already had like a few interviews last week and have more lined up this week. So I'm hopeful for all the early returns that I've had from just kind of poking friends and at other companies and seeing what's available, right? So yeah, we'll keep everyone posted on all the moves and any income that comes in. I'll be investing from unemployment. So also in the meantime, I did start a new playlist here for my layoff journey, quote unquote. So you can kind of follow that in chronological order. But yeah, I'll be updating this as I kind of make any new videos related to that of the layoff and like how I'm adjusting to things post layoff. So this is a good way to kind of track that from the very beginning. And yeah, you can catch that in the link below. But as usual, if you want to follow me off YouTube, there's a bunch of different ways to do that. You can do it on Blossom Social over here. Also looking forward to Robinhood Social later this year. I'll be curious to see if I just kind of totally migrate to that, whenever that comes out. And follow also on Snowball. So all the numbers I was showing you, you can kind of dig through those for yourself and kind of check them. Full transparency here, right? Nothing hidden. None of this is hidden behind a paywall as well. You can kind of look at this for free, and the links in the description below. There's also my Patreon. All my backlog of videos are in here as well, just as a backup in case there's more shenanigans for YouTube. Also a little membership option. Think of this as like a monthly tip jar, essentially. Mostly just there to kind of support the channel and get like low badge in Discord and things like that. And then also, of course, the Discord. So yeah, a lot of great back and forth with people, and always in here in between videos. So great to talk with everybody. It's been particularly active the last couple of weeks, which has been nice. Just added a new tax channel this week as well, too, to kind of discuss taxes as they're coming up for a lot of people. So definitely check it out. And then also just, of course, all my usual trade alerts. So get all the heads up and little buys that I do along the way during the week. And some of the bigger ones, too. So like when I was doing my big rebalancing, everyone got a heads up for this before the video went live, right? But yeah, that's the portfolio update for this week and this month. Definitely a meaty one. Apologies. But yeah, I'll catch you in the next one. The next video will probably be in a couple days, hopefully, for when I get my first unemployment paycheck. You can kind of see me invest that live. If you're getting some value out of this and liking it, just following my layoff journey as it is right now, definitely give a like and subscribe. Hit the bell notification to be notified for the next video, and I'll catch you in the next one. Peace.